we are talking about interest rates, because the Bank of Jamaica last week released their quarterly monetary policy updates on the Jamaican economy, covering areas including interest rates, inflation, foreign exchange, market interventions. And there have been calls, you heard on this program, 2 weeks ago, Keith Duncan from JMMB calling for interest rates to start falling. You heard Chris Zaka from Sagicor on this channel, on this platform, calling for similarly interest rates to come down. You heard, who was it, from Mayberry, Dan Theok, as well on this platform, predicting that interest rates are going to start falling. But last week, the BOJ said, we're going to hold it steady at 7%. So what is happening? Why this decision? What's going to happen for the rest of the year? Tonight, we're pleased to be joined by Governor of the Bank of Jamaica, Richard Byles. Welcome back to the show, Governor.
Thank you for having me.
Great to have you on yet again. So I gave the preface about what seems to be a widespread call for interest rates to start coming down, yet the Bank of Jamaica has held firm at 7%. Why that decision at this time?
Well, we're looking for the rates to settle within a corridor of 4 to 6% in a firm fashion, not just being there for a month or two, but a little bit longer. As well as we're looking at some key indicators to make sure that those are stable and on the decline and also within a corridor. And I'd mentioned a couple of them. One is wage inflation. We measure that. So we do a survey and we find out what wage increases have been each month. And so we watch that to see that it also comes into the corridor. The other one is business expectations. So this is businessmen and what they expect inflation will be like, because that helps them in how they set their prices. If they expect that rates will be, inflation rates will be higher, then they will set prices to match that inflation rate. So we're watching to see that their expectations about inflation also comes down and nestles within that corridor of 4 to 6%.
So we've seen, like you said, inflation being within your target rate for the past about 2 months. We saw March and April, you're at 5 point something percent both months.
Yes.
But you say that it needs to be nestled there for longer than 2 months. So how long will it take? What will it take?
Yeah, I don't think we have an exact number of months in mind, but what we want to see is that wage inflation comes down even further, inflation expectations too, and what we call
wage inflation. That's
yes.
People getting paid more.
Yes, we measure that every month. We do a survey, and it tells us what the average wage increase has been that has been granted over that period of time. So we survey that. But we're watching, I think you're familiar with the concept of core inflation, which is CPI inflation without energy costs, which is largely imported and therefore kind of outside of our control, as well as agricultural prices, which tend to be very subject to the weather. So we take those out of the CPI, and what's left is called core inflation. And we're watching that too. It's 5.7%. And that's within the corridor, although it's towards the higher end. Look, Kalila, we want to see rates come down too, but we're running a mile race. This is not a 100-meter dash. It's a mile race. And we've been in this race for 2.5 years now. It's no point in us having been tough and holding the line and getting inflation down from 11.8% to not running through the line and making sure that we have inflation under real control. And so just a little bit more time. Let's see all of those metrics fall in line, and we want to bring interest rates down. They will come down in the right time.
Well, we still want to know what do you consider a little bit? 2 months, 3 months, end of the year?
Well, I hope so. Yes, absolutely. Before the end of the year, I certainly have hopes of that. We're looking at the data, and every month we get all of this data that tells us what's happening in the economy. And it's on that basis that we make up our minds. And when I say we, I mean the Monetary Policy Committee, which is 5 of us, not just myself.
I noticed that committee also recently submitted its, well, not recommendation, its final no, that the inflation target remained the same,
Yeah.
4 to 6% for the next 3 years.
Right.
There are some people who believe that target is too high. So what goes into the decision to set that target at 4 to 6% in the first place?
Right. So we at the Bank of Jamaica look on a number of metrics, and I'll just call a couple of them for you. We look at the financial stability, the stability in the financial sector, both the banks as well as the non-bank sector. GDP growth, what has that been like? What do we expect that to be? The debt to GDP, very important. We watch that too. What's the stock of reserves that we currently have? What is the exchange rate been like, and what do we expect it to be in the future? What is our current account looking like? That is the foreign exchange current account, the balance of payments current account. So we look at all of these metrics and we determine what is the best general set of rates that suit the economy at this time. No, it may not be the same 4 to 6% in the future. It could be lower, but we're not there yet. And we still feel that at 4 to 6%, it suits the economy to stay in that corridor.
I remember when target was initially set within that range, that 4 to 6% a few years ago, and there was this whole inflation targeting campaign about why we should be setting a target, why the target was what it was. Can you explain for the viewers what is the correlation between the inflation target and growth? Because for a long time, we've been obsessed with growth or trying to achieve growth in the Jamaican economy. So how does this target help us to get that growth?
Yeah, well, generally speaking, the lower interest rates is the more growth you're likely to get, because it means that borrowing is cheaper. And so businesses and even individuals will borrow and consume more and produce more. So lower interest rates are important for growth. But lower interest rates also encourage inflation. And at this particular time where we are fighting to keep inflation down, lower interest rates are not in our interest at this time. But we will be lowering rates in the hopefully not too distant future. When we look at the trend that is occurring with the key metrics, we think that that is all going in the right direction. And apart from a few bumps that we expect in the future, we think that rates will stay within that corridor and allow us to bring the prime rate down from 7% to some other number, some smaller number.
Okay, we have a few questions from the audience coming in already. Let me see. Does the BOJ, this one is from Erdnati, does the BOJ have any tools to get the commercial banks to drop the interest rates on loans closer to the BOJ's rate?
That's a good question. So let me explain what is happening. In Jamaica, we have 11 commercial banks and merchant banks, but 2 of them in particular have about 60% of the deposits that are in the banks, especially savings deposits. And that means that 2 of them really set the rate for the rest of the industry. And to the extent that those rates are the cheapest form of funding that the banks have, they are not likely to want to raise those rates if they don't have to. But we would like to see them raise rates that they pay depositors and raise rates that they charge on loans. And what that does is slows the economy down, squeezes out inflation. And once we get inflation out, then we can lower interest rates again and get the economy to grow at a faster pace once again. But because they have such a large portion of the cheap deposit funding, they set the pace. And the way in which they have handled it in the last 2.5 years is that they have barely moved the savings rates and they have barely moved the lending rates. And that has had a negative effect on our monetary transmission system. So what we find is that in the capital market and in the money markets, rates have moved according to BOJ's policy rate. But in the credit market, that is a market where the commercial banks lend into the individuals or businesses, those rates have not moved significantly, nor have the savings rates. And that has really stymied our monetary policy transmission system. As a result, we have had to set our policy rate higher than what we would have had they moved both their savings rate and their lending rate. And this is an issue that we need to work on in the next couple of years. And I tell you how we intend to work on it.
Wait, so this is the bank's fault?
I'm just saying that's a hand that the whole economy has been dealt, that two banks have control over 60% of the deposits. I'm not accusing anybody. I'm just saying that's what the situation is.
They haven't moved fast enough. And as a result of that, you've had to keep your rate higher than you really want to.
We've had to move them higher than we have wanted them to.
Because you're right, when I look at that savings rate, interest rate for savings hasn't changed in years. It's remained at point something for how long now?
Yeah. So I was about to tell you how we solve it. Part of the problem is that it is such a problem to move your bank account from one institution to another. I don't have to tell Jamaicans this, they know it. You need to identify yourself with passport or driver's license, confirm where you live, and so on and so forth, a whole bunch of stuff. It takes a lot of time back and forth. What we want to do is to establish a central electronic or digital depository of information about a customer of a bank. So all of that information that we currently have to give to the bank to open an account, who we are, where we live, etc., will be now stored electronically and centrally and in a manner and at a standard that is accepted by all of the banking institutions. So that when you want to change your bank from one to another, all you have to do is have the central depository tell the new bank what is all of this information about you. And it's done digitally, electronically, without a hassle on your part.
So you wouldn't need to resubmit all your paperwork all over.
Correct, unless it's out of date. Of course, if it's out of date, then you have to update. But just like how you enter the country with your passport, you just put in your passport and you are accepted back into the country, or your visa when you go away. In the same manner, we want to store electronically and digitally all of that know your customer information so that people can move more easily from one institution to another. So if I don't like the savings rate I'm getting at one institution, or I don't like the way in which they deliver service, I can much more easily move to another institution of my choice. That's going to take a little while.
That would be very helpful. What is the plan to get that underway?
Right. So we are on course to do that. We have the World Bank working with us on it, and we expect in the next 18 months to be in a position where we can start a pilot in the public domain, and from there on make it into a reality. So
that pilot would be when?
I would think in about 18 months we'll be in a position. We have to remember that it's people's data that we are storing, personal data. So we have to be very careful about it. We have to make sure that it's at the standard that every bank will accept it. So there are lots of belts and braces and controls that have to go into establishing a system like this.
Andrew says, "Is that corporate NIDS?" Sounds like corporate NIDS. NIDS would help with that, wouldn't it?
NIDS would help, yes. But one of the things that I know even the banks are doing is they are working on their own similar kind of digital storage of customer information. So to the extent that they're doing so, and we can have each bank system interface and talk to the other bank system, then we can have that kind of portability, which is what we want.
So 2 questions coming in from the audience related to what you said about wage inflation being one of the things that you're looking at before interest rates can come down. Kofi says, no such thing as wage inflation. It's a scapegoat. And then Stronglink asks, are you saying the massive public sector wage increases had a major impact on the high levels of inflation we experienced?
Well, we survey. I'm not speaking anecdotally. I'm not giving you my opinion. I'm telling you what the survey tells us. This is a scientific survey that's done by a third party. And what it says is, here is what the increase in wages in the private and public sector has been like over the last period. That's a scientific base on which we measure what is happening with wages. It's not a guess business.
Right. But another viewer makes another point as well, because as you were saying it, I was thinking, but man, inflation has just been so high for a sustained period of time. I feel like we need to have the wages to keep up with the increased cost of living. The wages have to go up because the cost of living has generally.
No, and I'm not denying that. But what I'm saying is inflation is down in the corridor now for 2 months, right? 5.3 for April, 5.7 for March. But wages are above that. The wage survey says that the increases are above that. So we don't expect.
How much did wages go up by?
It's above the 5.7 and 5.3. That's what I can tell you. Not that much
Where
over.
can I find that survey?
No, that's a survey that Bank of Jamaica does.
Oh, it's not published?
No, it's not published.
Oh, so you'd have to tell us, you have to find it and get back to us then.
No, I know what it is, but it's not a number that we publish. And I'm telling you, it's above the 4 to 6 corridor.
Okay. Why isn't it published?
It's a survey that we do. We have not decided to publish it right now.
But it's been a survey that the BOJ has done for years. I feel like that would be useful information.
No, it's not a survey that we have done for years, but it's a survey we have done. Look, in the last 2.5 years, we have become a central bank that's independent and focused on inflation fighting. And that's one of the tools that we have brought into the arena of trying to manage inflation.
That would be useful for the public to know, though. Especially for employers. If I know what the average wage inflation is, I know how to set my wages in order to remain competitive and keep my employees.
Yeah. But let's move on, Kalila.
Okay. All right. Let's see what the next question is. It was on the same topic. Erdnati. So I'll just read it as a comment because it is a comment. He says, with respect for the past 40 years, Jamaican citizens have been having wage deflation. It's time that we've managed wage inflation so that university graduates can enter the lower middle class. Next question comes from Earl, who wants to know, Mr. Byles, would you gradually reduce interest rates or fix it one time?
No, we're likely to gradually reduce them. That's it. We increase them in steps, and we will decrease them in steps also.
Okay. All right. Next thing that we wanted to talk about as well was where are we with the foreign exchange rates, which used to be our quote unquote obsession. So looking at where the Jamaican dollar is.
Thank you, Kalila. Thank you.
No, really, we never used to be having these conversations about inflation
Exactly.
5 years ago. 5 years ago, the conversation was the Jamaican dollar and slip and slide and all these metaphors that came about. It has remained fairly stable, but we have been seeing somewhat of a slide in the past couple of months. Can you give us an update on where we are with the currency?
We publish a rate every day, and it's at 156, I think about 60 today. And it's been at about 155, 154, 156 for several years now. It's a major achievement, I would think, by the country that we have been able to keep the exchange rate reasonably stable. It used to be the number one reason why business people set their prices where they do. It's not anymore. Business people look more to what is international commodity prices to set their prices. So it's been a success story for the country. I don't claim it for Bank of Jamaica only, but for the country. And part of the reason is that we have had pretty strong flows, not just from tourism, but remittances also. We have a positive current account surplus, and that has helped to buoy the market considerably. But Bank of Jamaica has been very active in the market, and what we seek to do is to take out the volatility in the market. So we're not trying to set any particular rate, but when we see that the market is under pressure temporarily, we will sell into it. And when we see that the market is in surplus, we will buy from it. And the net position, though, is that we are constantly net buying and adding to our reserves. So we sold about a little less than $1 billion US dollars in the last 12 months or so. But we have net purchase, I beg your pardon, 1.3 billion. So apart from what we have sold, we have bought in addition to that to add to the reserves 1.3 billion. And the reserves now stand at about 5.1 billion, which is a pretty good standard for Jamaica. And that kind of fairly stable exchange rate has been critical in trying to manage inflation, because a lot of goods that we consume, whether food or to do with clothing or in our business or generally, gasoline and so forth, all of that is imported and comes across the exchange rate. So to the extent that the exchange rate is stable, it tends to hold the prices as low as possible. If the exchange rate was more volatile, if we were at 165, 170 to the dollar, you would find that inflation is very much higher than it is. So it's been a critical tool for us to use in the fight to keep inflation moderate.
But you did mention that the central bank has had to intervene, and you've put about $1 billion into maintaining it. Is that artificially keeping the exchange rate stable?
No, what we're doing is just taking the volatility, because the market is seasonal. There are times in the market when supply is strong and you find that the dollar is appreciating. That is, it's going from, say, 155 to 154, 153. And at that time, we tend to buy dollars much more than before and store it up. Then there are times when the market is under pressure. Maybe there's more demand to pay for fuel, demand to, so any other business expense that is not evenly spread out, dividends going out of the country, for example. And in that instance, we sell into the market to just try and keep the market a little bit more balanced always. But we're not there to set a rate. We're not in there to try to keep the dollar down. We're there to just take some of the volatility out of the market so that business people can plan and they can set prices that are reasonable. And they don't have to think that, boy, I wonder whether next month the dollar will be 160. They know that historically it has been around 153 or 54, 55, somewhere around there.
So Jalen, different topic now. Jalen wants to know, does Jamaica have a gold reserve? We've heard about this in the news recently, not local news, international news about the gold standard. Does Jamaica use gold at all?
No, we don't.
Okay, we don't. Next question coming from the audience as well. Kemoy wants to know, what is the BOJ doing to depend less on remittances? Is that a BOJ question, Governor? It might be a
No.
government question.
Yes, it's an economy question, right?
Right.
Yes, absolutely. But I must say, thank goodness for the diaspora. They really have been of tremendous assistance to the Jamaican economy.
And last question I'll take. Philip wants an update on the Fintech sandbox. Can we expect any new digital wallet approvals for the rest of the calendar year?
Yes, we have, I think, 3 wallets that have been approved. One is actually in operation, and 2 others are testing. They're doing their pilot testing now. They do it amongst their staff and friends of the institution. And there are others that are preparing. So the doors are open for anyone to come in and want to set up a digital payment system, a wallet from a commercial bank. The doors are open. Come in, set it up, show us that it can work, and we're happy to facilitate you.
And speaking of digital payments, any update on Jam-Dex? I feel like we haven't heard anything about it in several months, probably over a year now.
Right. So we have come across challenges with Jam-Dex. And I tell you what the latest one is. It's that, when you come to a merchant, let's take a merchant, and I just choose a popular restaurant, Burger King or KFC. Normally you have a line, excuse me, and the line is pressuring the cashier to do our transaction quickly. These institutions, these businesses don't want to have to use a different system for somebody who is using a debit or credit card and somebody who is using Jam-Dex. So whereas we had expected originally that they would use a phone system and you would just use your Jam-Dex on your phone and show them, use their phone and do the transaction, they would rather not do that. What they want is the same point-of-sale machine that does debit and credit cards to do the Jam-Dex transaction. So we've had to step back and to create that interface between Jam-Dex and the point-of-sale machines that you see at these business places. Happy to say that we have tested that. It works, and we are in discussions with a major commercial bank to gradually roll that out to some of their customers and to make sure that it works in real life and then to roll it out to all of their customers. So we have to make sure that all of the POS machines that is within the clientele of that bank are at the standard and have been installed with the interface to accept Jam-Dex, and then that can go public. And we hope that that will be done in the next couple of months, and so that when we get down into, say, the Christmas period, we will have Jam-Dex available at many of the kind of popular business places.
So you haven't given up on Jam-Dex?
No, we have not. It's been a struggle. And part of the thing is that because we are one of the first in the world to launch a digital central bank currency, there are challenges that you don't foresee. But so long as you are determined and you work at it day and night, as we are doing, we are hoping to be successful with it towards the end of this year.
Okay. Well, thank you so much, Governor Byles, for joining us. I appreciate it.
Thank you for having me.